If you master trading supply and demand this way, you will be able to make so much more money than you are making with it right now. And in this video, we will cover the reason why people are failing to find the correct supply and demand levels. But don't worry, I will show you the type of the supply and demand levels that actually reverse the price. And for sure, I will teach you how to find them. But finding the perfect supply and demand zones and actually trading them is two different things. Therefore, I will show you my step-by-step guide how I trade these secret supply and demand zones. But please guys, don't miss any part of this training because all of them is very important for you to be able to find these supply and demand zones and actually trade them in the live charts. Hello folks, welcome back to OP Investing. My name is Islam. I'm here to help anyone who have an extra 15 minutes a day to scale your trading to 6 or even 7 figures, spending only 15 minutes a day by trading fully mechanical strategies without getting glued to your charts or trading any complex stuff. So make sure to subscribe. Why do so many people fail to trade the supply and demand? Because basically they trade the supply and demand in the wrong way. Not in the sense of they are not able to just mark up some swing highs or swing lows correctly. They do it right. But the problem is that there are just millions and millions supply and demand zones that can be marked up, and just a basic question, which one exactly is gonna work? Like, nobody knows that. Nobody can answer that. Like, you are looking at the charts, maybe, I don't know, maybe you are familiar with some supply and demand concepts. They tell you that we have to look back at the history, and we have to look at above and below the price action. For example, this is a supply, this is a demand zone, this is a demand zone, and over here we might have another demand zone and another demand zone over here. Like, which one is going to hold? And should we ever look to those demand zones? Maybe the price is going to reverse exactly from this level, or we have to head in like it's a daily time frame, or we have to head into the lower time frame to find something. Nobody knows that. Like, it just a concept of the supply and demand. When you try to trade them all alone, they don't work. They don't, like, you're not able to trade the supply and demand in a systematic way because there are too many supply and demand zones that are like that fall into the category, that fall according to the rules. They follow all the rules, but not all the time they just hold it. Sometimes, most of the times, we get the violation of those zones. And for example, over here the price was making some higher highs, higher lows, and over here the price made the higher high. Probably this could have been our supply zone, but as you can see, it failed. So how you're gonna trade it? There is no a clear strategy behind trading the supply and demand. This is why you should not just focus on supply and demand all alone, even if you know how to define it. So guys, I literally don't want to waste your time talking about some nonsense. Let's get into trade. What do you have to look for in order to get the best supply and demand zones? First of all, while you are trading the supply and demand zones, we have to introduce the time element. Basically, we have to look for the fresh supply and demand zones. By the fresh supply and demand zones, I mean there is some timing, there is some timing. After some time, the supply and demand zone will be no longer valid for a particular level. So basically, in this case, we have to be looking for exact, like, specific time period. Like, for example, by the time period, I mean time frame. And for example, you are looking at the 15-minute time frame. There is going to be specific time where the supply and demand zones will be valid. After that, like, before all the price action that was before the time zone is no longer valid. So there's a general rule of thumb, guys. If you want to trade the daily supply and demand zones. Like basically you are a day trader and you want to catch the daily volatility, daily movement. In that case, you have to focus on trading the 15-minute time frame. And your supply and demand zones are going to be hidden inside of the previous day candle. Like everything that was before that, like that 2 days ago, 3 days ago, previous week, it all does not matter. Just look at this quick example. For example, these vertical lines, they just define each day. So basically this is 1 day, this is 2 days, like 3, 4, etc. So basically, as you can see, the price is diving into the previous day candle over here, retesting the previous day low exactly, and giving us like, I don't know, a crazy like 25-hour trade over here. You can see it was during the news time, and it works like even during the news times, guys. So basically, let's come back to our rule of thumb. If you want to trade the daily liquidity, you have to trade only on the 15-minute time frame. Look for the supply and demand zones on the 15-minute time frame, and look for those supply and demand zones inside of the previous day candle. If you want to swing trade, for example, you want to catch your trades within 1 week. Like you want to hold your trades up to 1 week. For example, even if we day trade, we don't hold it like 24 hours. We hold it like couple of hours maximum. So the same is true about swing trading. Like if you want to swing trade, you don't want to hold it like 5 days trade. You can hold it like 1 day, half day, 2 days, 3 days, etc. So to trade the weekly liquidity, weekly supply demand zones, you have to focus on trading the 4-hourly time frame. And all of your key levels are going to be hidden within the previous week candle, guys. All you need to do is just to open the 4-hourly chart and look at the previous week candle. All of the price action, all of the key supply and demand zones that are going to actually reverse the price are going to be hidden within the previous day candle. And there's a last one, guys. The last one, if you want to trade, if you want to take your trades and hold it like within 1 month, you have to open the daily time frame. And all of your key levels are going to be hidden within, did you get it? Like within the previous month's candle. Like it might be so, it might be new to you. Maybe you have never heard about this one before. But guys, just think logically. Everything behind that is just useless. That's just history. The price has nothing to do with that. That's why just these are the fresh, these are the most like the exact levels where you can find the liquidity. Everything behind that, compared to the time frame that we want to trade, is irrelevant. Personally, guys, I'm a day trader, so I always focus on the 15-minute time frame to identify the key supply and demand, like support and resistance, or whatever levels you want to call them. So basically, there are two supply and demand zones. Like two types of the supply and demand zones. There are fresh supply and demand zones that were already created within those like ranges that we have talked about, like previous day candle, previous week candle, and previous month candle. And there are the new supply and demand zones that are created relatively within the day, week, or months that you are trading. So basically, right now we will cover the old fresh supply and demand zones that were created previous day candle. We will be trading on the 15-minute time frame, and after that, if you stick till the end of the video, I will tell you about the new supply and demand zones that price creates as it develops its price action within the time frame that we want to trade, like the day, week, months. But right now in this video we will be just focusing on the daily time frame because we are the day traders. So basically, guys, you open the 15-minute time frame on any pair. Like it might be the major pairs, it might work on the minor pairs as well. Like exactly this method of defining the supply and demand zones can be applicable to, I believe, to indices as well, to crypto. Like you can try out. Personally, I trade the major Forex pairs, but you can try on other pairs as well. So basically, as you can see over here, most of our trades will be taken during the key sessions, the New York and the London sessions. All you have to do is if you want, you can just draw our reference point, which is the first 4 hours of the Tokyo session, like within our other methods, within our other trading patterns, we use that range. But over here, you don't need that one. But overall, we look left. And as you can see over here, we do have our last swing to the downside, or over here, last swing to the downside, the last impulse that created the previous day candle. And as you can see over here, during the news time, the price is just heading towards that level, retesting it and then reversing to the opposite side. And yeah, that's beautiful. And let me show you another example. Like, guys, let me show you another example over here. You can see this is a new candle. This is a previous day candle, and over here we do have a beautiful demand zone, supply zone, sorry, and we have a beautiful supply zone. And as you can see over here, during the London session, the price is heading towards that supply zone, retesting it and beautifully reversing to the downside. And guys, this concept is not going to work every single day because it is only one of the 3 core entry models. And like if the first core entry model is supply and demand, the second one is the breakout trading, which is exactly the new supply and demand zones that I will just talk briefly about that. But I have just separate the whole video where I am explaining how to exactly trade those levels, and I will leave the link at the end of this video. So basically, the price is going to the upside, retesting and reversing. But there is the second type of supply and demand, which is the one that is developing, and that is exactly those supply and demand zones are created after the price makes the breakout from our key levels. As you can see over here, this vertical gray stripes represents our key level, and as you can see over here, the price is breaking to the upside and retesting these fresh supply and demand zone. After that, we're making the breakout to the downside, and over here the price is creating the fresh new supply and demand zones over here. And exactly like at this case, I like to use the FIB levels to enter my trades, and over here we could have entered at the 60%, the stop loss is above 80%, and aim for like a beautiful 4-hour trade, guys. And the second one happens almost every single day. And by the way, guys, the market is cyclical. Some days, some weeks, some months we might have these fresh levels to get mitigated and to work almost every single day. But sometimes, most of the time, the new supply and demand zones works perfectly. And as you can see over here, the price is breaking through our range, retesting it, and then going up. And again, like over here, we've got another, like the breakout to the downside over here. The price is retesting our key level again on the FIB levels, and then giving us a beautiful trades, etc. So basically, this happens almost every single day. And over here, you can see this is our range. The price is breaking to the downside, retesting this demand zone on the previous day inside of the previous day candle, and just completely taking off to the upside. So guys, to be a profitable supply and demand trader, you have to introduce the time element, as we have talked, like as I have showed you over here. But this is not going to give you the perfect edge over the markets, because as I told, there are more entry models inside of the market. And first of them is, for example, the supply and demand. The second of them is the breakout trading, as I have showed you over here. The breakouts create the new supply and demands. And the third one, guys, is the reversal, is the manipulation trading, guys, because not all the time all of the supply and demand zones hold, and sometimes price takes the liquidity beyond the key levels where later we can enter on the reversal. So basically, by combining all of those three methods, you will be able to trade all the possible market conditions. You will be able to trade the trends, you will be able to trade the ranges, you will be able to trade the manipulations, again the ranges, because sometimes we might have the manipulations even during the trends. For example, when the price is just pushing, and at the last time it makes some sweep over here and then reverses to the opposite side. Or there are some times when the price is moving in the range, it sweeps the high, it sweeps the low and reverses. And basically we can trade both manipulations, we can trade supply and demand, like at both trendy and rangy market conditions, guys. And this is also good from the perspective that when you know your setups for the supply and demand, you will be able to filter out the bad trades for the breakouts. And when you know your setups for the breakout trades, you will be able to filter out the bad manipulation trades, because you know what is a good breakout. If you see the good breakout, you will not be caught while trading the manipulation tradings, or because you know what is a manipulation, you will not be caught trading the breakout trades by some fake outs. You know, that's why combining all of these three key entry models is just a beautiful, like it's like almost the holy grail of trading. I have prepared whole another video where I have explained how we do trade the breakouts. Just click over here and watch it right now.